which is not how I view things, but if I were viewing it as a trade, then gold being less overbought than silver would make a whole lot of sense. I just did this whole thing on the gold silver ratio and then also used the relative performance charts from stockcharts.com so that you could see that there are times over a long period of time where spot silver will move more quickly than spot gold and vice versa. And so a lot of people are looking at what's happening between the two of them and making a choice based on that. So for me, that's about a trade. However, personally, my preference is to have a strategy. And historically, with over 4,800 currencies that government debt-based currencies that no longer exist, I have enough data to go back and look at that relationship. There's no real substitute for the physical properties in both gold and silver. They've tried so many times and they'll continue to try. And I'm not saying they can't crack it because technology is technology. But up to this point, they have never figured out in a lab how to duplicate all of the properties that gold and silver have in use. And this is such a critically important piece of it, and why both gold and silver are above the central bankers and above the governments. Because to your point, all of these manufacturers, or they're building out all of the new infrastructure for the generation of energy and solar. And I mean, I just did a piece where I had like a laundry list of places and entities that use physical gold and physical silver. So when we're looking at a currency life cycle issue, I mean, I know I'm not popular when I say this stuff, but where is this used? One place. Where is this used? One place. So when demand goes away from these entities, this form of whatever money, cryptocurrencies, fiat money, then boom, they're gone. But with gold and silver, sound money, I'll do a count. If I had to guess, I would have to say that I probably had about 40 or 50 different places where gold was used, and again, where silver was used. And I could send you that list. And it's probably not as comprehensive as it could or should be, but it's used in every single sector of the global economy, whether it's a little bit or it's more, it doesn't matter. You're looking at a full quiver of demand.
Every currency follows a life cycle, and history shows how quickly relevance disappears once trust fades. Fiat money, digital tokens, and even so-called stable assets exist only as long as confidence remains. Gold and silver are different because they are embedded across the global economy. They are used in manufacturing, energy, defense, healthcare, transportation, and technology. This creates layered demand that does not vanish when monetary systems fail. When currencies collapse, their use goes to zero. When systems reset, gold and silver remain in circulation, not because of ideology, but because the world physically needs them to function.
And this is a fight for our lives. So what do you want when you're going into this fight? Do you want a penknife or do you want a bazooka? Because gold and silver are your bazooka. And that penknife will do no good if you're sitting in dollars or any assets that can only be converted back into dollars. I don't care if they call it a stable coin. I don't care if they call it a hoochie cooch. I don't care what they call it. If you can only convert it into dollars, then you got to look at the purchasing power and the value of the dollar. And it doesn't matter if the dollar is weaker or stronger relative to other fiat or government debt-based currencies. They're all going away. And that's why we have to go into a new system. And that is something that takes a minute, but it started Well, probably 1996 with the How to Make a Mint, and then 2009 when they started with Bitcoin. I mean, they're shifting us into a new system, and we have to go to a new system. I'm just really wanting us to have a sound money as part of that new system so that we can no longer, the public, meaning we, that's who we is, that the public can no longer be as easily abused as we've been over all these years. We have to take our power back. We have to be able to control what the governments do. Not the governments control what the public does. It's supposed to be the opposite. Which is not how I view things. But if I were viewing it as a trade, then gold being less overbought than silver would make a whole lot of sense. I just did this whole thing on the gold silver ratio and then also used the relative performance charts from stockcharts.com so that you could see that there are times over a long period of time where spot silver will move more quickly than spot gold and vice versa. And so a lot of people are looking at what's happening between the two of them and making a choice based on that. So for me, that's about a trade. However, personally, my preference is to have a strategy. And historically, with over 4,800 currencies that don't, government debt-based currencies that no longer exist, I have enough data to go back and look at that relationship.
The global financial system is clearly transitioning. This shift did not begin overnight. It traces back through decades of monetary experimentation, accelerating after the end of the gold standard and the rise of digital finance. While new systems are being built, the question is whether sound money will be part of the foundation. Gold and silver offer independence from debt-based currencies and centralized control. They represent personal sovereignty in a period of increasing financial surveillance. Sound money restores balance by limiting abuse, forcing accountability, and returning economic power to the public rather than concentrating it within institutions.
So, and I just did it on the Weimar Republic, so from the 20s. And what you see is, and this is where I believe we are in this trend cycle right now between spot gold and spot silver, is you'll see that ratio widen and then shrink, and it's now shrinking. Again, since you're using the technicals, I love them for this reason. You could also see that the support level on that gold silver ratio is about 50. And when I did it just the other day, we were at 56. So what I'm looking to see is whether it bounces off that 50-to-1 ratio or if it breaks below it. If it breaks below it, then what I would expect to see is a test of somewhere in the vicinity of the historic average. So maybe about 20-to-1, 27-to-1. If it bounces off of that, there's also a breakout period and on a top resistance level. So I would be looking at the ratio to go up and test that. And if it breaks through, that's different as well. But what I want people to really know from a historic perspective is that and you're kind of talking about that. We're just looking at two different charts to see it, right? Is that we're in the phase right now where that is shrinking. I do personally believe, because I've seen this so many times studying all of those currencies, that once we hit the obvious hyperinflationary stage, then that widens again. So personally, when I decide, do I want to buy gold or do I want to buy silver? What I look at first is what I'm trying to accomplish, because this is not a trade to me. I'm not going to convert this into dollars again unless I'm ready to convert it into some income producing asset. But just to capture a whole bunch more dollars that have less and less and less value, that makes no sense to me.
The gold to silver ratio reveals important historical patterns. Over long cycles, the ratio expands and contracts depending on economic conditions. In periods of monetary stress, silver often outperforms as the ratio compresses, while gold dominates during capital preservation phases. This isn't about short-term trading, it's about function. Silver excels as a medium of exchange in localized economies, while gold serves as long-term wealth protection. History shows this pattern repeating across collapses and recoveries. The key is understanding purpose, not price, and aligning metal ownership with real-world needs rather than speculative gains.
And historically, you can go back, which I've done, and look and said, okay, well, what does silver support the best? What does gold support the best? And as an example, just to kind of give people an idea of what I'm talking about, when the hyperinflation becomes really obvious, we're going to go very local for a while, right? And so I would take silver to put gas in my car, or to buy a pint of strawberries, or go to the farmer's market and buy food and those kinds of things. And silver performs that function better than anything else that I've seen. And it can be in any form, which is something else I want people to know, right? This is sterling silver flatware that I accumulated at yard sales, estate sales, things like that, right? It's 92.5% pure. So silver for me is on a day-to-day basis. I don't care what it does on the spot market. I only care because viewers care. Gold, on the other hand, is more about that wealth preservation for fiat money wealth. So what you've accumulated in your 401k or an IRA, fractional, so smaller than an ounce of gold, is perfect for property taxes. This kind of stuff is perfect for paying off a mortgage or paying or converting into income producing assets. So at Zang Enterprise, because I've been in this industry on some level my entire life. And I mean, the earliest I can remember is 10, and I'm going to be 72 this year. So I've been doing this on a whole bunch of different levels my entire life. I've never seen an opportunity like this, even having lived through the currency when Nixon took us off the gold standard and actually confiscated gold from the rest of the world. That's another story we could talk about if you want to, or save it for another day. But for me, it really is about, what am I trying to accomplish? What's the functionality? And then what's the best tool for that job? And then I lay it in and I get into position and I don't worry about it again.
When inflation becomes undeniable, economies tend to localize. In those moments, silver shines as a practical, divisible medium for everyday transactions: fuel, food, and services. Its form doesn't matter. Coins, bars, or even sterling silver carry utility. Gold plays a different role. It preserves accumulated wealth and enables large financial transitions, such as paying off debt or converting into income-producing assets. Fractional gold becomes especially valuable. This functional separation is why both metals matter. Together, they form a complete monetary toolkit capable of navigating instability at multiple levels.
I'm going to be doing a study actually this weekend on the possibility and probability of a silver confiscation, because that's coming up for people a lot. And so even though I'm a little, I'm going to wait until I really kind of dive deeply into that piece on the silver. But regarding the gold, there are all different ways and all different names for confiscation, right? Taxation is a form of confiscation. Manipulation is a form of confiscation, right? Price manipulation to keep you away from something at the same time that global central banks are piling into as much gold as they possibly can, because they know what they're doing to their currencies. But frankly, yes, I could easily see another overt gold confiscation, which, remember, I was born in 1954. And in 1964, I was at my Uncle Al's house with my parents, and he was my favorite uncle. He was a major antique dealer back east. And we were at his house, and he goes, "Come here, I want to show you guys something." And we went into his back bedroom where he had these two tall floor safes. And he opened the door of these safes. And he said to us, "If anything should happen to me Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes. So, of course, I looked, but of course, I didn't understand what I was looking at. I was 10 years old. But what he had was you couldn't fit one more of these 1 ounce $20 gold coins pre 1933 in those safes. So knowing what I know now, my bet would be that he had at least, if not more, 3,000 ounces of gold between those two safes when it was illegal to hold more than 5 ounces any other way. That had, when I realized it, and I didn't realize it when I was 10, what happened for me was I was writing one day. And I said, and if you were around in 1971 like I was.
History records thousands of failed currencies, but only a few enduring stores of value. Gold and silver are not trades. They are positions. They are tools selected based on function, timing, and historical precedent. Short-term speculation distracts from long-term strategy. By studying past monetary collapses, it becomes clear that real value persists outside paper systems. Accumulating with intention, understanding valuation relative to currency dilution, and holding through cycles has always been the winning approach. In an era of constant noise and rapid narratives, patience, clarity, and historical awareness remain the most powerful financial advantages.
And then I remembered, and lots of other things, because I used to love to listen to them when they were playing their penny ante poker on a Friday and Saturday night. You know, these people lived through the Depression. It was really interesting knowledge that I gained from them. But here he was sitting on thousands of ounces of gold that, here's my point, you could use in the normal marketplace to actually execute a strategy when nobody else realized that you could do that. So for me, in my accumulation, this has not always been true. I mean, I bought my house using American Eagles, quite honestly. But once we hit a certain point in the trend cycle, I no longer felt comfortable with bullion. And so I just do it in the pre-33 way, or with some fractional foreign coins prior to 1948, because Kennedy gave them a similar status. And because, frankly, I am so crystal clear on the fundamental value of an ounce of gold in terms of dollars, then that helps me understand, is gold and silver, I'm clear on that one too, is gold and silver undervalued, fairly valued, or overvalued? Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? And since I am super clear with all the money printing that they've done, right, that the true value of one of these is somewhere around 40 grand, I'll just keep stacking, you know, but I will do it in the pre-33 way. This happens to be 1879 is the date on this particular 1 ounce gold coin. And you could see it's raw. This one is what's called slab, so it's protected. It was mint state, never been in circulation when this was intended to be in circulation, right? And this is what I personally use for my savings account and my emergency fund, right? Just raw, it's just about 1 ounce. This is what I use for paying off a mortgage or converting into income producing assets like, I don't know, water rights, air rights, maybe even some real estate or apartment or what have you. And there are different levels of these as well, depending upon what you're trying to accomplish. But that's the way I prefer to approach gold and silver, not as a trade. We have been trained to think of everything as a trade, short term. Oh, that happened 15 seconds ago. That's old news. That's not the way trends. Yeah, there are short-term trends, and you can do if you're a trader and you just really want that activity. I was licensed in it when I was a stockbroker at Shearson, but I got to say, I never had the stomach for short-term trading. Even though I'm a technician, I can read them, and all the stuff you look at long, all you have to do is shrink it down to short, and you can see the same patterns. I I'm much more comfortable knowing what I'm trying to accomplish, using history as a guide, because, it's not really different. In fact, I'll tell you a little. What was it that we were watching? Oh yeah, it's one of our community members brought up the fact that there is a resurgence in landline that's happening, and that it's being sold to like the younger kids. So if all their groups of friends buy these telephones, these landline telephones, they can communicate with each other for free.